Yeah, so even though like here the dynamics change a bit. So here we see that the case is telling us that actually these people, the auditors, were aware that the bank will rely on the financial statements. So here there's a close relationship. So here the relationship, there's a close relationship. So here we are looking at proximity of relationship. So that's very, very important. That's very, very important. So in this case, like Lorraine was asking, will the law of thought apply? Please, can you hear me?
Yes, sir.
Or you guys prefer me just explaining and going through? Anyway. So that's something you need to be aware of. When you are going through the case, you need to establish the relationship first. In this case, we're told that the auditors were aware. So the auditors knew what was going on, and so a duty of care has been established. Then after this is established, the bank must further go ahead and prove that the auditor has breached that duty of care. He must go ahead and prove what are some of the things that the auditor did that shows that, oh, these people have breached the duty of care. The bank must prove that. So what's number one? Number one is you check for proximity of relationship. That's the first thing you do. You check for proximity of relationship and to see whether there's some sufficient relationship of some sort in order to determine whether the law of thought will apply here or not. Then after that, the plaintiff will come and say, because of X, Y, Z, they need to prove that the auditor has breached the duty of care. The auditor also is allowed to, show its working papers, and say, we believe that we've applied. If the auditor has any rebuttals, they can come up with their rebuttals. So that's the second thing. So number one is what? Relationship. Number two is the breach, proof that there's been a breach in the duty of care. And number three is whether a financial loss has been suffered. So the bank must prove that they've suffered the financial loss as a result of its reliance on the work of the auditor. Very, very important point. So if you state these points nicely and you explain them, you should be able to get your 6 marks. Okay, now let's move on to B. Let's move on to B. In B, we are told that we are told to evaluate 5 risk considerations and issues for famous chartered accountants that should be identified. The key word here is prior. Where is it? The key word here is prior to accepting the engagement. Prior to accepting the engagement. Very, very important. Very, very important. Always, that's a key word. That's a key word. So don't forget that. Prior to accepting the engagement. So what are some of the risk considerations that need to be made here?
So can we look at the fact that they have default in paying their existing loans, which may signal some more or less difficulty in payment or cash trap. So it may also, indirectly it may lead to unpaid fees probably at the end of the audit.
Okay, so that's it. So that's a risk for who?
The auditor, the famous chartered.
Okay. Is there any other risk consideration that you can see?
So too, I think we can also look at the fact that the previous auditor sometime during the audit issued a qualified opinion. So we could also dig into as to why they issued that qualified opinion instead of an unqualified opinion.
Okay, but why is that a risk consideration?
With qualified opinions, it could lead to the fact that the client was unable to provide certain information. The auditor needed to issue an unqualified opinion. So if they didn't get appropriate and sufficient evidence, it could lead to issuing a qualified opinion. So the auditor it could be a risk factor that any auditor could also look out for before accepting the engagement, if they will be able to get all the information they need from the client to carry out the audit.
Fantastic. That's a good point. Another thing that maybe you might not have noted is that the fee has been fixed by the client in advance. I don't know if you saw that.
Yes.
Yes, sir.
Okay, so the next question, when we are read through bit by bit, because sometimes you lose the points when we just read through. So we see that the fee has been fixed by the client in advance. And why do you think that would be a problem?
Well, sir, can we say that, before accepting an engagement, usually the client and the auditor must sit down, look at the scope of work before agreeing on the set fees. And when it's more or less like unilateral, either the fees may be too little or it may even exceed the threshold. Yes, sir.
Yeah, so that's fun. That's amazing. So if it's too small, for example, let's say the fee turns out to be too small, the auditor can respond in different ways. The auditor will reduce their time, because the fee is too small. They might not put in maximum time as they have to because they are not paid much. And then it will lead to poor quality work and it has an impact on the audit. So that's something always to look out for. Have you realized that in these questions, you see a lot about fees? I don't know if you've observed.
Yes, sir.
Yeah. So the reason why I'm going through is and making it a discussion is so that there are patterns. Like if you literally go through the past questions and there's a summary book. I'll see if I can find it. There's a summary book on audits. Now, if you run through that, that one, if I give it now, students will be lazy. So I won't give it now. If you run through it, and like at least you go through the classes, you should be okay. But you see that the patterns here are showing. You see things around fees all the time. So it says we should give 5. Let me see if I can add another one. Kingsley mentioned the qualified opinion thing.
But sir, wouldn't it raise eyebrows, for 2 years unqualified and all of a sudden 2 years qualified opinions and all of a sudden the last year before just signing off, you give a qualified opinion? I think that one too may raise eyebrows.
Yes. Yeah. That's also a risk consideration as well. That's also a risk consideration. Another thing is that the client seems to be like very, very focused on like the auditor's role as an advisor rather than an auditor. I don't know if you realize that.
Yes, sir. Yes, sir.
So we are not clear, you know, when at the beginning of the audit, like Caleb said, you always need to, the understanding has to be there. You know, it's like maybe you are going to sew a cloth for someone. The understanding has to be there. You have to come measure you. And everyone has to be clear that, okay, this is what I want before you proceed. The understanding is not clear because where the managing director is referring to them as auditor cum advisor, you know, it can lead to some form of confusion, and that can impact the audit because the expectations here are different. The client has these expectations, and that's the whole purpose of having understanding the scope of the work, capturing the responsibilities in an engagement letter so that people don't have false expectations. It's very, very key. Very, very key. Okay, let's move on to the next question. In this next question, for those in the strat, we will try to read the paragraph by paragraph so that we'll capture the key points. So just read the paragraph by paragraph, and I think that would help us. In as much as I want to go through a lot of the past questions, because what my experience is that when I tell students to look at past questions, they don't. I don't know why though. So maybe you guys can explain to me.
Well, sir, sometimes when you look at the questions and have no idea, you know, it demoralizes you. Personally, it's a more or less like it demoralizes. Oh. So it's like you want to complete, at least have enough knowledge and go through so that we don't get demoralized. I don't get demoralized.
Oh, okay. That's now making sense. Oh, okay. No, you don't have to wait though. The past question too is, say, I know that we are not done. I know that we are not done, but when we picked a lot of the past questions, say at least, I just want you to see that we are not even done, but you guys are able to answer some of the questions at least. It's also a revision technique, you know. It's also a revision technique. So you don't have to wait at all. You don't have to wait at all. Okay. So let's move to question 2.
Okay, question 2. You were recently employed by AD Chartered Accountants as a manager. You are currently preparing the planning memorandum for your clients. Manufco, a manufacturer of machinery used in the bauxite extraction industry. The company is a member of the Manufacturing Association of Ghana and has won several awards for manufacturing environmentally friendly products. You are also planning the audit of the financial statements of the year ended 31st March 2019. The draft financial statement shows revenue of 100 million Ghana cedis as compared to 50 million Ghana cedis 2018. Profit before tax 1 million Ghana cedis as compared to 0.5 million Ghana cedis in 2018. And total assets of 200 million Ghana cedis as compared to 150 million Ghana cedis in 2018. Your firm was appointed as auditor of Manufco for the first time in October 2018.
Okay, so first of all, first things first, like if I'm going through this question, I try to highlight important things. So this, sorry. So someone, or let's say me, right, was employed by AD Chartered Accountant as a manager. and you are currently preparing the planning memo. So that's something you need to know. So let's say Caleb. Caleb is currently preparing the planning memo for your clients, and the client is Manuf. Another thing we need to note here is that you are also planning the audits of the financial statements. You are planning the audits of the financial statements, right? And now your firm has been appointed for the first time in October 2018. So what do you think is happening here? Is anything happening here? Okay, let's move on.
With this is a first time audit. It's going to be a first time audit.
Fantastic. Yeah.
Yeah.
So one of the things is that first time audit. So once you have that at your back of your mind, sometimes they ask questions on first time audits, or even in terms of if they ask you a question on risk, there are some things that should come to your mind. Okay, let's move on. Let's move on to the second paragraph. You see what I'm saying?
Below is an extract of the business operation and development of Manuf Co. One of the key customers, Law Co. Limited, communicated in January 2019 via its lawyers with Manuf Co., claiming damages for injuries suffered by a drilling machine operator whose arm was severely injured when a machine malfunctioned. Odopanye, the chief executive.
Odopanye.
Oh,
good love is not good. Or good love is bad. Or good love is evil.
Odopanye. The chief executive officer of Manuf Co. has told you that the claim is being ignored, as it is generally known that Law Co. Limited has a poor health and safety record, and thus the accident was their fault. 2 orders which were placed by Law Co. Limited in January 2019 have been, can you scroll down?
Have been cancelled. So that's it. Have been cancelled. Yeah, okay. So you'd realize here that so they are trying to claim damages for injuries, because some accidents happened on ground. And Odopanye has told you that the claim is being ignored, as it's generally known that Law Company Limited has a poor health and safety record, and thus the accident was their fault. Okay, so these are 2 main things that you need to take note of. Let's move on to the next paragraph.
All machines are supplied carrying a 1-year warranty. A warranty provision is recognized on the balance sheet as 2.5 million Ghana cedis as compared to 2.4 million Ghana cedis in 2018. Odopanye estimates the cost of repairing defective machinery reported by customers, and this estimate forms the basis of the provision.
Okay, so all machines are supplied carrying a 1-year warranty, So here it's talking about what? Accounting. Oh, jeez. Says all machines are supplied carrying a 1-year warranty. A warranty provision is recognized on the balance sheet. So is this an estimate? What do you guys think?
Yes, it's an estimate.
Yes, it's an estimate.
So the pioneer estimates the cost of repairing defective match by blah, blah, blah. So you have accounting estimates here. So as I'm reading through the question, a lot of things are coming to my mind. You know, a lot of things are coming to my mind. And you see that the things we highlighted, they'll ask questions around it. Okay, next paragraph.
Work in progress is valued at 50 million Ghana cedis as at 31st March 2019. A physical inventory count was held on 23rd March 2019. The chief engineer estimated that the stage of completion of each machine at the date. One of the major components included in the bauxite extraction machinery is now being sourced overseas. The new supplier, Osuro Co., is located in Germany and invoices Manuf in euros. There is a trade payable of 1.5 million Ghana cedis owing to Osuro Co., recorded within current liabilities.
Okay, so here as well, it's talking about inventory. This whole thing is talking about inventory. You know, this whole thing is talking about inventory. So one of the things I'm thinking about is work in progress, right? There are a lot of things. How is work in progress valued or estimated? You know, how is it, sorry, the bad handwriting, but let's say E. How is it going to be estimated? Or how did they come at 15 million? And also, the count as well, but we would go into that, you know. We would go into that and see if that was an issue. But mainly, the valuation of work in progress, you know. How do you value work in progress? Anyway, that's an accounting question. So let's move on to the next thing. The next paragraph, please.
Okay, sir. Manuf co-designs, constructs, and installs machinery for 3 key customers. Payment is due in all 3 installments. 70% is due when the order is confirmed, stage 1, 15% on delivery of the machinery, stage 2, and 15% on successful installation in the customer's bauxite mine, stage 3. Generally, it takes 4 months from the order to be confirmed until the final installation. Yes.
Okay. So Manuf company designs blah blah, payment is due in 3 installments. And okay, let's move on with that. Let's move on with that. Let's read the last 2 paragraphs and we'll go to the questions.
At 31st March 2019, there was an amount outstanding of 1.5 million Ghana cedis from Mrepanye Company Limited, which was in dispute. Mrepanye Company Limited is refusing to pay until the machinery, which was installed in August 2017, is running at 100% efficiency. Odopanye owns 60% of the shares in Manuf Co. She also owns 55% of Pacific Co., which leases a head office to Manuf Co. The pioneer is considering selling some of her shares in Manuf Co. in late January 2019 and would like the audit to be finished by that time. Required: A, using the information provided, identify and explain the significant audit risks and other matters to be considered when planning the final audit for Manuf Co. for the year ended 31st March 2019.
Okay, so if you see again, risk. If you go through the past question, you see risk, threats, ethical issues. Like it just runs through all the time. So what are some of the significant audit risks that we see here? So this time around, I would begin. Then this time around, I'll begin. So one of the things that where we can see some significant audit risk is in relation to the warranty provision, right? It's relating to the warranty provision. Why do we, so we've identified it. Why do we think it's a significant audit risk? Why do we think it's a significant audit risk? If you go to the question again, and you look at the warranty, the warranty provision is about 2.5 million. You know, it's about 2.5 million. Right? It's about 2.5 million. If you look at it in relation to your assets, it's probably about 2.5 million divided by 200. You know, when you look at that in relation to it, you can see that it's a huge amount. It's not that small, so it's a significant. It poses a significant risk. You know, and what are some of the risks here? There could be an understatement of that provision. You know, there could be an understatement of that provision. Why are we saying this? In 2018, if you go back to the question, you see that in 2018, the warranty provision was 2.4 million. So I don't know if you realize that it's only increased by 100,000.
Yeah.
Yes, please. Yes, please.
Right. And usually warranty provisions, how is it usually? How is the provision usually estimated? So usually for warranty provisions, one of the ways that they estimate is they look at it in relation to revenue. So they look at it as a percentage of revenue. As a percentage of revenue. If you look at the revenue increase is much, much higher. Much, much higher. So for the increase in warranty provision to only increase by 100,000 is quite small. So it seems that it probably has been underprovided for. You know, it has been underprovided for, and that means that's a big problem. But you don't need to go, you don't need to do all that detailed analysis. What you need to know is that it's an estimate, right? It's an estimate, you know, and I hope you guys know what a warranty is, right? So a warranty is like you go and buy something from a company, then maybe it's faulty, something happens to it, then they replace it for you.
Yeah.
They replace it for you. That's why they usually look at it as a percentage of revenue, because you've gone to buy it, you pay cash, it feeds into your revenue. So they usually look at it as a percentage of revenue. So they say that, oh, usually there's like, they make about maybe for different companies, they look at maybe it could be 5% of revenue, 10% of revenue. So you look at it in that regard. But you do not necessarily have to do all those details. It's fine, but you first of all, you need to know that it's an estimate, right? If it's an estimate, then it is exposed to an under provision or over provision. You need to know that. So once you have that clear, that alone can help you fish you some marks. But you need to know that for warranty provisions, usually the provision is made based on the revenue. So if you look at the revenue increase and it doesn't seem to match with the warranty provision increase, then there's probably an understatement or an under provision. So that's the first significant audit risk. Does anyone see anything else before I
say the receiver, the payables?
Okay, yeah, that's a good one.
Yes, for there may be an issue of foreign exchange losses or foreign exchange gains, because the payables, that's one of their main supplier, invoices the company in euros, which is different from the currency which they operate in. So they try just estimating the payables to be 1.5 million without looking at the possibility of an exchange rate losses or gains is also an issue.
Yeah, very, very good point. Very, very good point. Very, very good point. Another audit risk is what we are talking about in terms of how to estimate work in progress. Work in progress, right? How do you estimate work in progress? That's a key risk, because that's a key risk, is the valuation of the work in progress, right? It's usually, sometimes this valuation of, you need to understand what is going into it, and this one, it seems like the chief engineer is the one who seems to understand everything, so that's also a place where a key risk exists. And what about the timing of the inventory count? Is there a problem with the timing of the inventory count?
Yes, sir.
For those who are in audit. Okay, go ahead.
Usually, physical stock count is done at the end of the year. So you doing it prior to the end of the financial year may lead to disparities between what will actually be reported and what you actually counted.
Fantastic. So there's a danger that you might not have the correct inventory valuation roll forward as at the year end, because what you might be counting, might be differences between what you actually have, what you actually count, and what you report. So that's why inventory counts, for those who are on audit, they do it at the end of the year, or stock counts, whatever, or stock take. They do it at the end of the year. I don't know why they are doing it 2 weeks prior. I'm not sure why. So that's also a place where there's an inherent risk. Okay. Let's move on to the next question. I don't know, anytime you are doing past questions, the time goes very fast. Okay, let's look at B.
B, explain the significant audit procedures to be performed during the final audit in respect of the estimated warranty provision in the statement of financial position of MALVCO as at the 1st March 2019.
Okay, explain the significant audit procedures. What are some of the significant audit procedures? Can anyone take a shot at this? I don't think we've gotten there yet, but maybe we have, I don't know. Can anyone? I think we have. You see this question, I've seen it several times. The significant audit procedures performed for warranty provision for an estimate. Can anyone take a shot at it? Remember that when we are doing our first pass question, right? I mentioned that there are about 8 audit procedures, 8 general audit procedures. I don't know if you remember. So number 1 is inquiry, number 2 is confirmation, number 3 is inspection of documents, number 4 is inspection of tangible assets, number 5 observation, number 6 recalculation, 7 reperformance, and 8 analytical procedures. Please, if you remember this, just say yes. Say
yes,
that.
please.
Yes, please.
So these are the generic account audit procedures. These are the generic audit procedures that we always like. You need to always remember. You need to always remember. But with regards to warranty provision, what are some of the audit procedures? Audit procedures are simply it's simply the procedures you engage in to test a particular transaction, like warranty provision. So what are some of the things that you do to test an estimate? What are some of the things you check out for? That's all it's talking about.
I think one, we could inquire from management how they calculated or they make estimate for their warranties. So what basis do they use to make that estimate for provision for warranty? 2, the auditor could, based on its understanding of the company's process of estimating warranty, the auditor could also do a recalculation of that provision based on its own understanding of how provision for warranty is supposed to be done. And if there are any difference between the two, they could further do an audit procedure to estimate or give understand the reason for that difference.
Fantastic. So you see the 8 that I mentioned, right? It's something you need to remember. So that in the exam cry, if you don't know the audit procedures in respect of maybe a particular thing, maybe a liability or something that they bring up, you can use these 8 procedures to, find your way around things. So like Kingsley said, can recalculate, you can do what we call analytical procedures as well. So analytical procedures is just analysis. The same way you would, and analytical procedures, we mean that you compare the provision this year to the prior year, or you look at the provision in relation to revenue, or you look at the provision in relation to the budgeted amount. That's analytical procedures. That's analytical procedures. It's nothing strange. Another thing is you could also review the terms for the warranty. So I guess that will come as a result of your inquiry with management. You sit down with them and you ask for, their terms of warranty, to gain an understanding of what goes into their warranty policy. You perform, like I said, analytical procedures. You can do recalculations. You can also review board minutes.